Joining us now on what to expect is Joseph Moore, Morgan Stanley semiconductor analyst. Joseph, good to have you this morning. I guess the real question is we have the published consensus out there for what, maybe $5.60 a share for the quarter, and then we have what's embedded in investor expectations. Where do you think the bar sits at this point?
Good morning. I think expectations are higher. I think this is a transitional phase, right? We're looking at Blackwell that'll start shipping around the August timeframe. And so we're looking at Hopper driving business. And I think a month ago, there was expectations that there might be a little bit of a pause, given how much enthusiasm there is for the next generation product. We're not hearing that. And generally, the market's seeing this as pretty strong. I would tend to agree. And I think that there will be material upside around the quarter and the outlook. But importantly, I think that the market is also looking to next year with a little bit more enthusiasm, given that we've heard from some of the big hyperscalers that their spending will persist into next year, that we do have a big product cycle. So we are sort of setting up for something bigger that's coming. And I think this should be both a good quarter and one that gives people a sense of enduring growth beyond that.
So you don't think there'll be some kind of a pause or a stutter step in sales based on this product transition, despite what we heard reported about AWS's intentions here?
I mean, there certainly could be. It's not out of the realm of possibility. Blackwell is about 2.5 times as powerful, more so in some workloads, and will probably be 20 to 30% more expensive. So you could certainly see people deferring. But I would say we're not seeing that right now. We're seeing very strong demand for the Hopper products, certainly into the July quarter when we don't have any Blackwell. And then once we have Blackwell, it'll be the minority of products, but we'll be back in a very tight allocation situation for those products. And so right now, I don't actually anticipate a pause. It's certainly possible that one could evolve. I think the Amazon thing was a bit of a misread of the transition to this Blackwell. Something that Nvidia had talked about quite a bit is that the initial effort to do the Grace Hopper product has sort of transitioned into a Grace Blackwell product. And so it's not really a cancellation per se. It's a very strong ramp that we would expect next year around Grace Blackwell. And to the extent that Grace Hopper was a small ramp, that's something that's been understood for a while. So it's a strong outlook. But I think in contrast to last year, where we knew near-term numbers were good, but there was some sense of what's next year look like, we now have pretty good visibility into next year because we've heard from the big customers and we have the product cycle. So I think it's if there is a pause, it wouldn't be the end of the world. I don't think it would be really a reason to pull away from the stock. But as of right now, I don't anticipate that there will be one.
Yeah, you mentioned a couple of times. I mean, the durability of the demand has been the main question, I guess, for a while, because you could see they were in shortage for so long, and obviously there wasn't enough product to go around. But, I mean, just exactly how much investment capacity does the industry have to maintain NVIDIA's, growth rates? Obviously, it can't continue at the current growth rate. It's going to be $112 billion in revenue this fiscal year. It's up by 4x in the last few years. But I guess how do you see it unfolding over the next couple of years?
Yeah, I mean, look, they've done a remarkable job, both the demand side and the supply side. And you mentioned that there had been shortages. Those shortages have been easing, which was created some consternation for the stock earlier in the year. But the reality is there's just other shortages. We're dealing with power and rack space and sort of places to put these things. That's more of the binding constraint, still growing quite a bit. But NVIDIA's supply had been outgrowing that. So I think those shortages had been easing. But I think that there is quite strong demand. And then I think if you look at the hyperscale comments, in January, we got some confirmation. We kind of heard that spending would be more like what's in the NVIDIA model versus what previously had been lower. But then in the April quarter, or the April earnings period, we actually heard quite a bit about hyperscale companies continuing that spending into calendar 25. Mm-hmm. And there were multiple instances of those companies talking about not just how much they're investing, but the enthusiasm that they have for the returns on that, even though those returns aren't really apparent yet. Like, we're sort of still seeing the business models evolving for AI, but the enthusiasm for that investment to endure into next year is pretty significant. On top of that, the Blackwell product will be a significant value, will probably help them deal with kind of any potential market share concerns, and there could be some pent-up demand for that product once it starts to ramp. So, I think the view of 25 is pretty good. There's still questions as to, this has become such a large portion of cloud CapEx. Yeah. I would definitely expect some deceleration over the course of calendar 25. But for right now, things are really strong.